I'd say that the primary impetus has been, in my opinion, has been regulation. And it's been because regulators, you can see that with PSD2, you can see that with some of the excellent thinking of the Bank of England, generally speaking. It's around spurring competition in the space of access to financial services, such that ultimately the ultimate winner is going to be the end consumer. So we see that as probably the main driver today. Having said that, it doesn't mean that financial institutions are not coming around to seeing this as a genuine opportunity. So we think that there's also a shift in the ecosystem where financial institutions are seeing this more and more as a genuine opportunity for them. Open banking on its own in a vacuum as a set of standards, and it's already been said, it is sort of not enough to drive adoption and deliver on the promise of access to financial services for people. One of the biggest problems that we have is around identity and authentication. The authentication models today of redirect and decoupled are pretty bad when it comes to the user experience. They are likely to involve a lot of drop-offs, and this is probably what you're seeing. There's the sort of infamous chart of a 90-day re-authentication for AISP users, and you can see that it just drops off a cliff. And PISP, if in the middle of a checkout you have to redirect, you can expect that you will see equally huge drop-offs, and hence the adoption is not likely to be huge when you compare it to the incumbent, which is card solutions. The other thing is these things already have solutions to them. First off, there are things like identity proxies that you can use, or payment credential proxies that you can use, so that you're not just freely sharing your bank account details. And when you use the example of the amazing work that the NPCI did in India, where you just have a phone number and you use that as a proxy to pay anyone. In a similar way, authentication can be something that can be even two-factor can be done through passive authentication means that various authenticators, hardware authenticators or otherwise, can provide. But there isn't a standard to allow for that to happen, which is a good segue to the second point, which is that today open banking is all sticks and no carrots for the banks. So there isn't really an incentive for the banks to invest and cooperate to build those authentication models to start with. And we're basically forcing them to open up their data. We're probably going to start cannibalizing the card payments and the revenue they get from that to use bank accounts as a form of payment. And there really isn't an incentive yet for the banks, and there very well could be. And I don't know if it has to be regulated or market driven, but you could have open APIs for the origination of instant loans, for access to lines of credit at the point of transaction, etc. There's no reason why things like this can't be in place to make open banking more attractive to the banks. For me personally, because it appeals to my sort of appetite for scalability, the real heroes in open banking today are the people creating the building blocks to make it accessible to everyone. It's people like TrueLayer and Plaid who are democratizing the access to the APIs, despite the fact that you have a crazy proliferation of standards, at least outside the UK, and sandboxes that even today in many countries are barely accessible for a lot of the banks. And these building blocks are required. If you look at I mentioned India before, if you look at UPI, it is a managed service. You plug in through your PSP and it gives you access to IMPS, it gives you access to UPI in general. And ideally, we have something like that makes it easier for the SMBs or the rising FinTechs to be a part of this rather than having to integrate with 100 API endpoints across banks. We also want to look at the glass half full here. And we have to acknowledge that this is a very uncomfortable change for a lot of players in the ecosystem. And to be honest, if you kind of look at it philosophically, it's part of a broader movement towards open data. And so I think that's going to lead to a proliferation of use cases outside of financial services strictly eventually, and create all sorts of process efficiencies. If I were to focus specifically on financial services, where we're really excited is for the fact that open banking opens up the ability for folks like Google and other tech companies who basically have a lot of know-how with building great user experiences and helping users derive insight. And so having access to people's financial information would allow us to give them very, very useful insight that can improve the way they manage their finances. It would allow us to, there was a point that was mentioned earlier, it would allow us to unlock all sorts of offers and rewards for those users that are meaningful for them as opposed to spammy. And you can think eventually if the as I mentioned, authentication models and dispute management platforms follow suit to actually be competitive versus the current card networks, you can think of a situation where payments are free, instant, and secure for all users. And I mean, we mentioned users, but no, I mean, everybody would probably agree no payment system would be successful without also providing value to merchants, because you need merchants for the adoption. And I think PISP could have a lot to offer to merchants in that sense, but we're not there yet. I think there will be a move towards commercial APIs or premium APIs, whatever we want to call them. And those are APIs that I think will bring the banks, will increase the appetite of banks to be on board. Things, as I mentioned, like transaction-based financing and access to instant loans. And then the other one is better authentication models. I think over time, just as the banks came around to being familiar with the concept of tokenized card payments, they will come around to the concept of tokenized bank accounts as a form of payment, and then that same long-lived token could be used for account information access as well. I think if we can get to that, and my hope is we will get to that, you will see that the appetite to engage in open banking will be better and the adoption will be better. To me, they're the sort of earliest and best-in-class model, UPI in India. They moved from 427 million transactions in 2017 to well over 10 billion in 2019. And as of May this year, they did over 1 billion transactions for like 3 months in a row or so. And so when you have an interoperable environment, this is the sort of adoption that you can see, even if there's a slow start at the beginning. To me, both for open banking and longer term for open finance and open data, it's better identity management. Whether it's in the form of something like a federated identity model via the banks, as you see in Sweden, or otherwise, I think that's what's going to be necessary for those user experiences and journeys to be seamless.